Okay, guys, I want to go over how to use the cash flow analysis. I have created two different versions for you so you can choose which one suits you best. One is done on a weekly basis and one is done on a bi-monthly basis. As you can see, your checking and high yield savings accounts are broken out. When you watch the video on bank accounts, I explain the reason to have a high yield savings account. Now, here are some important reminders when using the cash flow analysis. Number one, always carry enough money in your checking account to cover your near-term bills, such as anything in the current period that you're going to pay, such as your rent, car payment, visa, whatever is in this period. You can see on my example, I have these items in this period. So I would definitely want to make sure that I know that I don't have enough money in my checking account for what's currently there, plus the paychecks that are coming in to cover those expenses. Number two, make sure the signs are going in the correct direction on the numbers you input, such as all inflows into your checking account, such as your paycheck right here, are positive. All outflows of your checking account, such as your rent or mortgage, are all negative. Any outflows need to be negative. Any inflows need to be positive. If you do not have them going in the right direction, it is going to give you incorrect information and allow you to make incorrect decisions with your money. Therefore, make sure they're always going in the right direction. Number three, when you are transferring money between your high yield savings account over here into your checking account, make sure you allow enough time to have that transfer take place. It usually takes somewhere between 3 to 5 days from an ACH to go ahead and clear from your high yield savings to be deposited into your checking account. So plan ahead if you need to go ahead and move money from your high yield savings into your checking account. So let's now go over an example, and we're going to use this one that I put together. This basically looks like the template that I put together for you guys. I've kind of given you guys items for the period base. I have not filled out any of the numbers. You guys are going to have to do that. So the first thing that you want to do is you want to populate this from where you're at all the way through the end of the year. You're going to put in all the items that go into your checking account and all the items that come out. And you're going to put estimated amounts for each of those items for every period. This way, you can understand what your balance is going to be at the end of every period. And plus, you're going to be able to see at the end of the year how much money you're going to have. The beauty of this is when you do this, it is going to give you visibility of any holes that you're going to have coming up or any big expenses that you may need to borrow money for to cover, or it's going to allow you to figure out, hey, I got excess funds and I can transfer them over to my high yield savings account and start earning interest on that money. So doing this all the way through the year will allow you to see where your money is at all times, at any time. Also, when you go ahead and know the exact amount, you want to go ahead and put it. So if you actually know that your Visa bill is going to be, $600 instead of $500, put in $600 to change it. So with that being said, I go ahead and during the period when something goes ahead and clears my bank account, I go ahead and highlight that in yellow. So when my paycheck comes in, I highlight that in yellow. When my rent comes out of my bank account, I highlight that in yellow. And in theory, every item in the period that you put it in should clear. This way you never forget. Now, sometimes you may have a carryover where, you pay your electric bill online and there's a weekend or something like that and it doesn't come out directly and it carries over into the next period. Then you would just carry that over. But for the sake of this example, let's say everything in this period went ahead and cleared. So everything that I paid for and everything that I got for paychecks came into my bank account and left. So when I do that, I go ahead and highlight everything in yellow. When that happens, when I get to the end of the period, so on January 15th, I will say, okay, I've got nothing left here. I want to clear everything out that was attributable to that period. And I'm going to delete all that way through the total of January 15th. And let's go ahead and actually figure this out. So this means that there was a net change of a negative $500. So I spent $500 more than I had coming in. So I'm going to have $500 less in my checking account. So I'm going to go ahead and delete those out. And then I'm going to go ahead and say delete. Therefore, that pops up and those items automatically move up. I then need to change my checking account balance to the actual balance, which will reflect the period's transactions that occurred that I highlighted in yellow. So since we spent $500 more, my bank account's balance should be $1,500 at this point in time. With that being said, I want to make sure that my next item encompasses all my numbers. As you can see, this only includes the transactions during the period and doesn't include the bank balance. So I need to pull this up to make sure that my beginning bank balance is included in my new total for the next period. I then want to change the date on this item to whatever the beginning date was. So that was 1/15. So when you do that, you need to make sure that you do the same exact thing over on your high yield savings account. So you're going to change the date here to 1/15. You didn't have any transactions. You want to make sure that this total here encompasses your beginning balance. So you want to pull this up here and you do that. Now, note, if you guys need to add in some lines to add some more expenses or add some more income, try to do them in the middle of the period, such as here. So when I do that, I do insert row. This way, you don't have to change the formula. The formula already captures it, such as if you were to add it like right here at the very end and you go ahead and insert row, as you can see, this formula doesn't capture the line you just added. You would have to make sure that you go ahead and pull that down, okay? So we do that. With that being said, we go ahead and say all these transactions, and except for this $25 gas bill, cleared the bank and we're good. So I went ahead and highlight those in yellow. Therefore, I had a net change of a positive $2,400 for that period. So now my bank account goes to $3,900, guys. And I delete all this out right here, okay? And then I'm going to delete this row and the one I inserted here because they need to change also, and delete those out. All right? I leave the $25 gas bill because I know that didn't come out in that 2-week period. So it's got to come out in this 2-week period if I paid it, or it reminds me I need to pay this. So with that being said, I go ahead and make sure that this formula is incorrect. Usually you'll see if it's not the same as the other formulas, it'll have like a little green area on the left, and when you click on it, the yellow box will come up. As you can see, it only encompasses transactions through here, so you need to pull this up and make sure that it encompasses that item that you needed to carry over and your beginning bank balance now. And you need to go ahead and change the date here to 2/1 because now you've gone into February. Once again, you need to do this over here on the high yield savings account. Okay? In regards to the high yield savings account, the only thing you're going to have to enter on here is the interest that you get every month. And you just need to put the interest in the proper period that occurs. The checking that I use for high yield savings generally pays it on the 15th or the 16th of the month. So I just put it for purposes here, the second half of the month. You will notice down here, I go ahead and I build up in this example up to almost $5,100. I don't really need to carry that much money in my checking account at that point. So I'm going to transfer $3,000 out. So I put a negative $3,000 because that money is leaving my checking account and going over to my high yield savings account. This number is the opposite of whatever you put in, so you don't even have to do anything. So if it's money that you're transferring to your high yield savings account from your checking account, it's going to be a negative $3,000 coming out of your checking account. And if you need to bring money over from your high yield savings account into your checking account, you'll make that a positive, which I'll show you down below. So when you do that, you can continue to see where you will have excess cash. So you can go ahead and put it over in a high yield savings account until you want to take that money and invest it somewhere, or you can just leave it in the high yield savings account and let it earn interest. So as you can see, every week to 2 weeks, I already know where I'm going to stand at any point in time. And in this example, I have another $4,000 being transferred over the week of August 15th. I have another $4,000 September 15th. However, when I get down to the December, you can see that the money gets real tight in the checking account. With that being said, I'm going to have some expenses coming out the second half of the month in December, which I'm not going to have enough money to cover for my paychecks and the beginning balance because I have this $6,000 Roth IRA contribution that I need to make. So with that being said, I'm going to be short $3,200. So I went ahead and I would go ahead and I planned for a $5,000 deposit into my checking account from my high yield savings account, guys. Therefore, I make this a positive number. As you can see, you're running tandem with your checking and high yield savings at the same time, and these bank balances should be easy to track on a daily, weekly, monthly basis once you get this down. Again, remember, you want to go ahead and highlight anything that clears your bank in that period, and then you want to delete the information out at the end of the period and update your actual checking account balance to what it is. Your high yield savings account should only see your transfers in and transfers out and any interest that you're accruing. Guys, this is pretty simple, and this is a pretty powerful tool because it's going to give you the vision that's going to allow you to see where everything is at going forward, and you're not going to have really any surprises. And this is critical for managing credit card debt and other debt because it's going to allow you to see when you have the ability and how much you have to pay down on your debt so that you can get rid of it. As I said, if you've got any questions, refer back to this video, and I've also included some written directions at the back of your complete financial model to understand how this works. It's pretty simple, guys. Put in your estimates, fill in your items, and then rock and roll.